Yo, shake my hand, everybody. Welcome to another video, another analysis. Today, we're going to be looking at gold. We're going to be looking at gold in this video. Let me actually just out of this. I want to just quickly jump through my list and just go straight to gold. I was meant to resume, so I'm making this recording at least on the 17th of April. Theoretically speaking, I was supposed to start my senior trade everyone else in the academy and war room. We're just going to start in May. Otherwise, it will just completely cloud the little time that I have right now, right? So anyways, looking at gold, is gold. Yes, it is. This is gold. So we're going to do what we've been doing in all the other videos. Please take time to go back and start this series, right? At the end of this video, there's always going to be a link to the entire playlist. The playlist is called Asset by Asset Analysis or something like that. One asset per video. Try and make the video succinct and short and clear as possible. I appreciate the comments that have been coming through. Someone even said, don't even worry about the time. They want the information, and I like that. I truly appreciate that because it really helps with the pressure, right? So we're looking at gold here, and like I said, we're doing long way of analysis, man. And gold has been paying me for a very long time. I mean, those of you in the private Telegram group, if you recall, early last year, I showed you some of the longs I've been holding for a while, like a long while. Yeah, and then I think I had to close one position, and I've got one position still running. I closed that position because I wanted to make sure I had enough margin in my account while I was away during the 90 days. So, because yeah, I wasn't working, I wasn't monitoring any type of accounts, right? They become important later on in specific time frames. But maybe we can find another broker for gold for now, for the time being, just so I can get this long wave analysis out of the way. Apologize. I am also recording this at a point in time in my life where I'm slightly low energy. I've been up all night doing all sorts of administrative things, trying to catch up. So I am quite low on the energy. So the video is not going to be that energetic, but I hope the information on its trajectory for since the beginning of time. But you always get those weird people, and I say weird, with all due respect, those weird people who truly believe that gold is the biggest, greatest thing, and that when things go bad, always buy gold, and that's a common safe haven rotational thing that we do in trading. But it's not just gold. There's dollar, there's yen, there's Swiss franc, there's Bitcoin. There are different types of safe havens, and some safe havens are not always that safe, right? So if you think about it, in the last 10 years, gold has technically only moved about 19% in the last 10 years, right? In the last 10 years, gold has technically moved only about 19%. And Bitcoin, on the other hand, despite the fact that the price of Bitcoin today is about 30,000 US dollars, and it used to have an all-time high of almost 69,000 US dollars, Bitcoin in the last 10 years has moved almost 60,000%, right? So I mean, I don't know, man. I don't know how you guys do your mathematics, your risk assessment, your portfolio rotation, your management. But if I was an investor, I would look to spread, diversify, but also know where money is, technically speaking, where my bread is buttered, right? And for me, that's always been very crypto orientated, right? So this is gold, and we've got a beautiful chart here from 2004. Strong imbalance, breaking golf in pattern, breaking out, breaking market structure, and then moving, all the way across, right? All the way across to the upper side of price. And remember, every single candlestick on on this time frame at least represents 1 year, right? And you can see this is fairly a very beautiful bullish structure. For the sake of it, I always like drawing Fibonacci's just to back test them, just to see assets behavior. There is that 50% in between golden ratio. Price finds a nice place to sit, and then markets continue to the upside. We can assume that this is going to continue. We can also assume that this is part of the parcel, right? These long-term red waves are needed as retracement of long-term parabolic moments, and now we're waiting to see what's going to happen next. At the current place where we're at when we're looking at 2023 in relation to last year, 2022, and maybe the year before and the COVID year again, this is a potential continuation pattern. We call this a PCP. Price is simply in an interesting range, technically speaking, right? It doesn't have to be like a textbook range, but it's a definitely textbook consolidation zone. And we're looking at gold sitting in this area for about 3 years, right? Up and down, and we are waiting for a good break to the upside. And people like me, by the way, we're very, 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 very hopeful for a touch at lower levels of gold at about 1.5, but we didn't actually get that type of push. If you notice, it wasn't just the crisis that was going to help us do that, but if we had a crisis that was helping us do that and a dollar doing nothing, or a weak dollar, and then maybe, but last year gold, a lot of pressure was offloaded onto gold, and a lot of pumping put onto the dollar because of interest rate hikes. And now this is where gold is. Now, if you're a good, far much more good student than I am, right? I am completely behind with my COT data. If you're up to date, right? Because catching up right now takes too much time. But if you're up to date on your COT on gold, I bet you, all the money in my account, the last 3 COT logins, you will notice that gold has been very bullish. I'm pretty sure their longs are slightly or dramatically above 300,000 longs, right? Because on average, that's how they move from memory from last year. But between the last 2, so I'm talking about the COT data report that might have come out on the 11th of April. If you go back and check and you compare 11 April and COT data from the 4th of April, off the top of my head, I'm pretty sure you're going to see a slight decline, right? So you're going to see that on the 4th of April, or that week, the COT had slightly more longs than it does now, and that's most likely a take profit moment, right? A take profit moment where there's a slight reduction, but I'm pretty sure, structurally speaking, we're going to find reasons. We're going to find things like supplies. I'm on the presidential chart, 3 months time frame, and you can see at the bottom of that PCP pattern that I drew for you earlier on, at the bottom of that consolidation is some tactful buy in the event that price does decline there. There's almost like a bodyguard, almost like a don't drop too far, drop sure, but later on, if price ever does venture lower, markets are allowed to keep moving ahead without even facing us, right? But we do have a clean bullish engulfing pattern that is looking a little bit abandoned. I think it's terrible this year, or anytime soon, right? I mean, this is really, yes, beautiful, fresh touch, blah blah blah, but cleaning balance. But no, really, the reality is markets in the last year or so, since April 2022, which is over here, this red candle, markets thinking 3 months, move in 1 year, right? This is April 2023, April an order block. So if we're to see a decline, those of you who are like me wanted to see a long-term price decline, and a long-term price decline would require a lot of things to happen. We need Euro USD to slow down, Pound USD to slow down, and all those assets that we've already looked at in the series are telling us that price is not going to slow down. So I think it's safe to say gold will be doing the same thing, right? So remember, when we're risk on, there's certain risk on things that run with us. When we're risk off, certain things run risk off. Gold generally is a risk off asset as a safe haven, unless on the table there are other safe haven flows that are active. So if you look at your crypto right now, it's active. If you look at other things on the table right now, it means gold doesn't have to carry that risk of identity, right? So if we do come down here, then the lowest we're looking at is this range between 1,800 and 1,900. and potentially a distal marking point of about 1590. Right, by the way, please do check the description in every single video I'm putting out, because I'm detailing the analysis. I'm giving you guys the stop loss zones, the entry points on the weekly, monthly, daily, so that we can have written records so that no one can say I didn't tell them. And if they say maybe I told them but the videos were too long, well, the videos are short now. If they say maybe you told us and the videos were short but I don't remember which video, well, now all the information is inside the description, detailed, every zone detailed, distal, proximal, completely marked out. Why am I doing this? Because I want to be right? No, I can't always be right, but I want to make sure that my pedagogy, my approach to teaching, my explanations are clear for you to help you make money. All right, that's the whole point. So we can have record of these things and do stock checks, so that it's a beautiful feeling 1 year after a war room to look at your trading journal, to look at your statistics, to see your extremes, your average losses and your average gains. It's a beautiful thing to actually see an account grow. It's literally similar in my experience. My little girl is turning 3 years in 4 weeks. It feels like that moment where you know that you and your partner are pregnant, and you tracking the pregnancy throughout first trimester, second trimester, and then you think, wow, the journey is finally over, the baby's here, and you realize you actually have to track the baby's growth throughout their first year, second year. It feels very similar. Growing a small account for the first 2 years focus. I'm talking about focus traders who are really trying to build something real here. The first 2 years of building a consistent small account requires attention to detail, right? So that's why I'm doing this, right? So let's now that we're here in free, we can't. I generally struggle when price looks like this. I cannot say, surely too, that there is a supply. There isn't a supply. To me, I just see a wild bull run, right? A bull that's broken out the crawl and is just running. One day this bull is going to run and get tired of running. When the bull gets tired of running, generally speaking, bulls come back. My father hates financial markets. He loves reading books. He's a manufacturer by trade. He used to own a clothing factory, or still does, and now he owns a butcher. He's like really trying to retire soft. But what my father understood all the time was cows. And so on our farm, with the cows thing, all the cows are given a lot of salt once a week, because cows always come back home. Home is where they quench their thirst, right? So dam, we know that our cows are accounted for because there's a thirst trap. And you can see this bull here might run, but it has to come back home. At some point in time, the golden bull runs like crazy, but it has to come back home. It has to. It can't maintain long. Yes, and these take time. By the way, you can moment, right? And we might be at the beginning stage of a bullish gold moment. Every time price leaves a sustainable order block, we get very strong parabolic structures, right? So just please look out for that. But the bigger point here is there's no supply in sight on the presidential chart. On the governing time frame, which is our monthly time frame, we start to see an interesting picture. We see stuff that would normally find on the 1 hour time frame. Price is fractal. Fractility speaks about the repetition of time frames. If no one ever taught you about fractility, then you're missing out, because you really don't understand the basics building blocks of liquidity, right? So fractility, if you just hit the link down below and sit through my module 1 and module 2, of course, but really just take the time to learn about this stuff, right? So I'm curating these high liquidity grabbing areas, and some of them are resemblance of long tail supply. Some of them are resemblance of the final buck, the selling point. But remember, this is a gold chart that is also stretching its hands at what we would both, or all of us, or 10 of us, whoever's going to watch this video, we could have point, or the highest turning point on this chart, right? So gold has some big decisions to make in 2023. That's why we're doing the long wave analysis, because if you can lock in 10, I'm going to do 100 charts like this with you, 109 charts. I'm going to try and do 2 or 3 a day. We'll see how far we can get by May. But if you can lock in 10 perfect swing trades, and you lock them in and you let price create three significant demands. So if you get into a buy, listen to me, if you get into a buy and you can allow price to leave your entry point without you being psychologically tempted to close, to tilt, to take profit, to tighten your stop loss, and you allow price to breathe. Breathe once, it creates a valid area of value for you. Breathe twice, creates a valid, I'm on the daily time frame here. Three times, if you can allow price to do that, then you can then start to really move your stop loss. If you're going through the long, and this is the same for supply, you start to track the last, listen to me guys, this is very, like I'm talking about, if you want to see where the term 365 comes from, what it took for me and where I got this idea. Once you have this clean break of structures and price on a daily time frame, be it supply, be it demand, be it buy trends or sell trends, and markets give you at least two good, strong, fresh demands away from your entry point. And if you can just have the discipline to take your stop loss value and check on your broker, you want to always tell you, hey, dude, this is how much you owe for swap. Swap is this. You want to go to your broker and check what is the rollover fee on weekends. If you're one of those brokers who can do that, if you can be business minded and say, I've been holding this trade, Leroy, for the last 3 weeks, and now my swap fee for this trade is $10 and my rollover fee is $15, whatever it is. And so for me never to take a loss in this particular account right now, I need to at least have $26. It's 25 there, right? So I'm going to add 26 to calculate the spread. You always have to leave a little bit for spread. So if you can move your stop loss in life, I'm talking about a small account, I'm talking about you playing on 0.01 and you've just been holding this horse for 3 weeks, 4 weeks, 0.02, and you can move your stop loss here, somewhere here, and you say, Leroy, when I put my stop loss here, it is multi-protected by these demands, right? Stop loss value, my in profit, I'm locking $35. That means the cost of doing business, in terms of doing business here, well, there's the 35 if you can't see it, right? The cost of doing business of is covered. The other part of your mind is US dollars in profits if I close now. And if you want to close now, you can. I'm not telling you not to close now. I'm simply telling you, you're never going to get some of these competitive low buys or some of these competitive high sells if you keep getting in and out of price. What I encourage people to do is, number one, master module 1 and 2. Number 2, when you're going through it the first time, the second time, the third time, to master those rules, create 2 trading accounts. Trading account number 1 that will need to have more money is going to be your swing account. In your swing account, you tell yourself Christmas is in December, payday is in December, and you swing. You swing in May, you swing in June, you swing in July. You remove the pressure of withdrawing. And trading account number 2, with less money, to keep your brain on the pulse, to keep you active, to scratch the trader's addiction, is a day trading account where you're in and out of price, where you're buying here, selling there according to supply and demand. You're seeing some action and some returns. If you can do that so as to safeguard your swing account, eventually you will learn to let price flow. You will learn to let price go with you instead of being in a rush to close at a supply here. You know it's going to get broken one day. You don't know when, you don't know how, but you know that 12 months chart is buying, 3 months chart is buying, governing chart is buying, weekly is currently at sell, and you're waiting for the weekly. This is what we mean. You're waiting for, why am I teaching? Why am I teaching? You're waiting to drop in alignment the trend. If you can remember this about your trading, you know that this daily supply will be removed one day because the daily supply will have to carry it. If you can do that without being too greedy, what will happen is you'll start to see $200 become 400 become 8 become 1.6 become 3,200, and over a process of time, 90 days, which is about 3 to 4 months, you might actually get yourself a $10,000 account. Now the golden rule there isn't the money that you make. The golden rule is the painful process that it took for you to understand that there is a calculation of fees that you must always keep in mind, a maintenance of structure that you must always understand, and a continuous alignment of price. Sometimes price will scare you and drop down big time, but if you've entered all those, it's supposed to be 20 minutes, I'm already 20 minutes in. The next part is going to be quick and short. I hope this helped you. I hope the basic reminder of basics of what we do as swing traders has been embedded upon you. Until then, you will refund, reduce, withdraw a little, make a lot, risk a little. You will have fun with trading. But if you're looking for something sustainable, you have to pay the price. You have to go through an annual process. And I don't want anyone to join my academy who wants short-term miracles, because I barely ever respond to such messages. Go through it. Right. If you're on our learning site, I can track you. I can track the last time you logged in. I can track you if you've completed lesson 6 and now you want one-on-ones to make money because something has gone wrong in your life. I can track all of this, and I can immediately tell you off the bat, either journey is still long for you. All right. So sorry, I apologize. Look at this supply on the governing time frame. Deeply invaded. This is important. Even if we're to draw the supply much more strictly and ignore the area of competition, what we'd have to do is, there's a 3 months demand. I'm going to tighten it like that. And then I'm going to add a new demand. We're going to have to take account of the fact that the buyers have become so daring, very close, however, to a major turning point. Whenever price creates a new major turning point, a higher supply, we're happy that it breaks structure, but it always has to cool off. Look at this here, right? I'm pretty sure this was a big test of the previous high in 2020, the COVID year. I don't know if you guys remember that. That was fun trading gold there. Markets come in, right? Equalize these highs, markets drop, markets fall into a sustained demand, markets find a very strong balance in base, tap, go. Dig deep in, creates a new buy area, price shoots up, right? So the buying maintains against a major supply. Major turning, I'm not saying the words major for fun. Those of you who've done my course, you know this is supply and demand number one, major turning points, right? So on the governing time frame, we've got an opposing area of value versus an area of value. One of these is going to have to take each other out. Either the demand has to break or the supply has to break, and we're very close to finding out. Now I'm going to move to the weekly time frame. I'm going to tighten this, instead of just drawing zone upon zone. Look at that, clean. This is last year, by the way, right? This is last year. And I think from weekly, let's switch to my war room chart. From weekly, ladies there, look at it, right? Now let's go back to my last year's chart. I've been off charts, so don't worry, you're going to see what you saw last year in the videos. But wasn't it beautiful selling gold last year? I mean, we sold gold up until the very lowest part of the curve. And then I think when this gave, right, it became clear. If you look at my November videos on gold, it became very clear that we're done selling gold. And I've said this rule many times. You want to catch your world trades, you need to have good institutional knowledge of supply and demand and draw your trend lines according to it. Number one. Number two, I've said if price is to break a trend line, nothing on the other side of this trend line can stop price. I've said this many times. No matter how many supplies you see there, nothing. So if you're looking at your chart like this, by the way, right? And you're like, well, Leroy, why didn't this supply work? I know for a fact that you haven't finished my module 2 videos. I know for a fact, because in module 2, I give you the tools, and the tools are, you have to draw a structured trend line. You can't say there's a supply there, so I'm going to start selling. No. But what if price has broken structure down here? There's a strong demand that broke this downward structure, right? And we spoke a lot about this in not just in gold, but in many other charts. I've brought this issue up, like, be careful. If you see my daily charts, I've got supply and demand trend line supports drawn in to make sure that I am not on the wrong side of the trend. You have to acknowledge when banks are moving, because when they move, they will move with or without you. And the best way to do that, I'm just trying to get my old chart back. The best way to do that is to obviously keep track of COT, right? So this is all the way into October, November, right? Look at this, right up until the first week of November, markets start to rally out. And as soon as this bullish engulfing pattern plays in mind, bearing in mind, prices sitting, this whole green zone is that monthly demand. So when we enter into governing demands, monthly demands, we abandon selling. When we enter into monthly supplies, up here, we are banners in charge. And since the year 2023, gold, while I was away, basically what took almost a year to happen from April all the way to November, and the last 3 months, gold is just kind of like raptured back to the upside, making contact yet again to a very tired monthly supply. So this supply here has been shrunk to its smallest, components as a daily supply within the monthly supply, because you'll see how the area of value is drawn here. But you can see it's week on week, and even on the weekly time frame, where the banks are starting to look interested in selling this thing. That's the whole point of the lessons on COT data. You won't find it. I mean, I could be wrong. I haven't looked in a while, but I'm pretty sure we're going to see some consistent cooled off shorts, very much aggressive longs, right? And so now, area to look out for is obviously here on gold. This is a very good area to look out for. We don't know, you don't count your chickens before they hatch. I hate buying in places like this, although I've seen it work out. Statistically speaking, when I start to do the back testing series for students, only that's going to be on the site, we can actually statistically map out how many times this cowboy buys work out. So that if we can get a probability of, say, it works out, say 70% of the time, then you as a trader can then decide to take a risk on it, right? Right now, I don't know and I don't like it, right? But if this area is to break, then a better demand is all the way down here, which will allow gold to cool off. But anything goes right now where gold is, right? Anything goes in the sense that this could work, because after all they care about is just removing sellers, right? So right now we need retail traders to start loading a lot of sales, loading. Gold is, I'm pretty sure on the COT, like I said, if you check, I could be wrong, but if you check, there's been a reduction of longs, but not a significant one. I'm pretty sure longs are above 300,000 as of I guess 11 April last week, right? And we will take profit a little bit to allow retail traders to start selling. Number one. Number two, you can see that price significantly on Friday arrived at a strong supply, or not a strong supply per se, but as a supply nonetheless, a historic supply. It is the true supply. It is the daily supply, which is the peak supply, in the weekly supply, in the monthly supply, which is also the last supply standing before we create a new all-time high. I'm just struggling to find it, and I think it's this one, bearish engulfing pattern. This is it. Outside of this supply, you're going to get nothing else. And this is where price is sitting right now. So yeah, it's time to sell a little bit short term. Remember, short term is hours to days, hours to days, hours to days. So on Friday, yeah, you can still sell a little bit on Monday. I'm risk free, but if you're not careful, short-term selling can quickly turn into long-term pain, right? So medium-term pain. If selling insists and continues, my amazing community of friends and family and 365 community, and we break below this, right, then this is a good target for sellers if they're involved. And if we see that there is imbalances being created on the weekly time frame, then sure, we can look to a supply that might be used to break this weird uptrend. And if that supply doesn't exist, then we need a retest of this supply here, and then we can then join in the selling. Now, Leroy doesn't like guessing when to move. So what Leroy does, and what we teach in module 1 and module 2, is instead of wanting to move first, wait for the banks to move first. Copy, follow their footprints in the sand, right? So if they're selling, they're going to remove this area, they're going to remove this area, then they're going to leave sell orders up there. Yes, it means you can't sell today, but guess what? It also means that next week or in the next 2 weeks, when you can sell, you have a higher probability chance of not being stopped out, right? So this is my amazing my take on gold right now, right? If we break this, then we're coming down here. We'll look out for that, but we'd want a weekly touch. I think we'd want a nice weekly demand zone to confirm it. If we get in here, ladies and gentlemen, as a man who's been waiting for 1.5, gold levels reach 1.5, which will clearly never happen anytime soon. If we get here, I'm really having a party, right? I'm really trying to go have a party, even if it means exiting here. If by the time price comes down to me, this whole area is not cleared yet. If it's not yet cleared, I'll stop there. Let's see. Right. So I hope you've enjoyed this. This video is slightly longer because, I had to go on preaching mode. Oh my goodness. I apologize. I'm only noticing now at the end of the video that I wasn't sharing the full screen. Sometimes I get ahead of myself, and then, yeah, I'm sorry. I don't even know how many people made it to the end. But yeah, I appreciate you. 365, shake my hand. Until next time, peace.